Welcome to Finance Fools. I'm Matt.
And I'm Dan.
We're regular guys who have learned from our financial mistakes. We're here to share some tips with all of our listeners to try to save them from making the same mistakes we have. We're not in the finance field, such as accountants or financial advisors, but we have a lot of great knowledge in many areas of finance that we think we can help you out with.
And for our first episode, we'll be talking about credit cards and some common misconceptions.
Well, Dan, since you brought up credit cards, what kind of questions do you have?
Well, I have about $3,500 in credit card debt, and I'm struggling to make my minimum payments. Is there a way that I can make my minimum payments and still get ahead?
Absolutely. Many credit cards give you the opportunity to do a balance transfer. Depending upon your cards and your limits and what offers are there, you may take advantage of a current offer that your card has, or you might even apply for a new card and take advantage of offers that they have. Some of the offers will charge you up to 3%, but you can get 0% for 12 months, all the way up to 21 months, depending upon what cards are out there and what offers are going on at the time. So during this time, after you pay your 3% fee and have your balance going for 0%, then from there, every payment you make goes straight to principal. Okay, Dan, so after answering your question about balance transfers with credit cards, what other questions about credit cards do you have?
Well, I've heard that there's a lot of different rewards. Are there some rewards that I can take advantage of?
Absolutely. There's a lot of rewards and a lot of incentives as well. You have cashback rewards. You have miles for like airplane flights, but then also you'll have an incentive to get a new credit card where some of them will say, they'll give you $150 if within the first 3 months of you having the card that you spend $1,000, or they might even, have a different dollar amount, different time period, but you can have an intro offer and then on top of that, cash back as well.
All right. What if I'm a student and I'm looking for a credit card? Is there some way that I can use credit cards with being a student and help paying off student loan debt?
Well, if you're a student, one of the first things you'll want to do is if you get a credit card like from Capital One that is for students, so you can build your credit and get a credit history going, you need a positive payment history to build a credit score. So after you get a credit card, keep your balances low, and start a payment history and build credit over time, then you can actually, depends on how much you have for student loans and paying them off, what makes sense. But I did something pretty crazy that most people wouldn't look at. Recently, I've acquired 2 credit cards because they had 0 fee to do a balance transfer. And with that 0 fee, it was 15 months of no interest. So I have about 3 years left on my student loans. So from doing the offer that I did on the 2 cards, I shaved off 6 months worth of payments. So between $1,800 and $2,000, I will end up saving because I transferred my student loans onto credit cards. Now, most people won't do this, but it depends on your current situation with your finances and everything that you're looking at. That does affect your debt to income ratio, which is a totally different thing to talk about later. But it's something that I did, and I'm taking advantage of no interest to pay off my student loans, but I only transferred about $11,000 over. Now, if you had a $30,000 or $40,000, you wouldn't even want to consider that yet. So, but that's one thing that I did recently.
All right, and I heard that you said that you had 2 credit cards for doing this student loan deal. How many credit cards do you currently have?
Ooh, that's a good question. I have quite a few, actually. I have one of them that I have some debt on. I did some home improvements, and then I transferred the balance onto it because I had about 18 months no interest. That card actually gave me 1% to transfer a balance over. Excuse me, I don't mean they gave me 1%. They only charged me 1% with 18 months no interest. So that was a steal of a deal there. I have a couple of the cards that, like I said, I just acquired them for student loans. and I'm paying them off that way. I have a Citibank Double Cash card, and on that card I get 1% for everything I buy, and then I get 1% for when I make my payment. So I use that card each month for my monthly bills and expenses. But I also have two other cards. I have an American Express Blue Cash card that I get 3% back from at the grocery store, 2% back at gas, and 1% for everything else. But I only use that at the grocery store for the 3%. The 1% for everything else is not as good of a deal as the Citi Double Cash card, so I use the Double Cash card for everything that's not groceries, except for my Sam's Club MasterCard. That card is 1% for everything, but then also 5% back for gas, and then 3% back for travel and dining out. So I have quite a few different credit cards, but like I said, the one that I use, the Double Cash card for all my bills, gas, travel, dining out with the Sam's Club card, and then American Express 3% cash back. So having all those cards that I do, I don't have a card just to have a card. I have it because it's giving me cash back and it's working for me. So that's what I like to do. Most people will use their debit card. It comes straight out of their checking account, and then they know where they're at with how much money they have to spend. For me, I want to use those different credit cards, and then I'll make payments on them throughout the month whenever I get paid, and try to carry no balance on them, so that way I'm not paying interest, but yet I'm earning cash just because of how I spend and how I pay when I spend.
Okay, so I heard that you said you have a Sam's Club credit card. This is a store card. So how do I know when I go into a store if I should sign up for the store credit card or not?
Well, the Sam's Club MasterCard that I have, it is two things. One, it's a MasterCard that I could use anywhere, but then also it is through Sam's Club. So if there's any deals in Sam's Club I can take advantage of, such as 24 months no interest, I can use that card, but then I can use that card outside as well. So if you have like store credit cards, Best Buy has a store credit card. Tons of stores do. But something like Best Buy that gives you not only rewards, but will also give you long-term deals with no interest, that's a time to take advantage of a card. But if you have a store credit card that's like a Claire's card in the mall or a Sunglass Hut, those are store credit cards that aren't really worth having. You might get 10% off on your first purchase, but then from there, what do you get? You don't get anything. It's you might get offers and little things like that don't really equate to too much. So anytime you're going to have a card, in my opinion, it makes sense to have it when that card is working for you and when you'll take advantage of it and actually use it. So then on top of that, with some of the store cards, I have a Home Depot and a Lowe's card. For home improvements that I have, both of them, they'll offer 18 months, 24 months, no interest. That is a card that is giving you free money. It's free money only because they're charging you no interest over those terms, unlike a Claire's card or Sunglass Hut, something that doesn't make a whole lot of sense. So what other kind of questions do you have about credit cards, Dan?
Well, I really appreciate all this information that you're giving us. And so I know you're talking about building that credit. So what if I already have bad credit? Is there a way that I can build good credit through credit cards?
Absolutely. And one thing too is when you have bad credit, it doesn't go away. You have to actually work on it and get a plan. One saying that I love is plan your work and work your plan. So whenever you are working on a plan such as fixing your credit, you have to know that you might have to pay more than the minimum. You're going to have to get that positive payment history going. You need to, on your credit cards, if you carry a balance from month to month, you want to try to pay no interest, but then also you want your credit utilization percentage under 30%. So if you have a card with $1,000 balance, $1,000 limit, not balance, you don't want more than $300 on it at the statement date. The statement date, when that comes out, that is what will determine what is reported to the credit bureaus and what shows your your credit needs. If you have too much balance that you're carrying on the card each month, then it looks like you're irresponsible or that you have financial problems at home. So if you are able to carry under that 30% utilization, that will help. Payment history will help, credit utilization, and time. But if you are going to have a $1,000 card and you need to have $700 of credit card debt, spread that out over 2 or 3 cards if you need to, and then that way it can help you to not have the higher utilization. That'll be one way. But sometimes, the biggest thing is making your payments, paying it down, trying to get it paid off, and then that way your utilization is next to nothing. That'll help you to improve your credit.
Awesome. So what would you recommend as the top 3 cards that our listeners should invest in?
On that, every listener's needs is different. I have my 3 go-to cards. Citi Double Cash card, I get 2% back on. American Express Blue Cash, I get 3% from the grocery store. Sam's Club, I get 3% for travel, 3% for dining out, 5% for gas. So I would say the Sam's Club and the Citi Double Cash. And a third card, it varies. If you don't shop at the grocery store very much, 3% back may not be that big of a deal to you when you could get 2 off the Double Cash card. But also, if you're somebody that travels a lot and can use the miles, that could be a good one. So from creditcards.com, there's a spot on there that shows rewards. And when you look at getting 2 miles for every $1 or 1 mile for every $2 that you spend, you can look at them and figure out the percentage of reward that is, and then also look at whether or not you're getting charged an annual fee. If you're getting 2% back, but then you're paying an annual fee, well, you're just as good off on a Citi Double Cash card as what you are to pay $75 a year plus getting 2% back on a miles card. So when you look at your rewards, not every reward is the same, and that's something to take in consideration is what percentage return am I getting on that card, because you want to get the biggest bang for your buck.
Okay, so I heard you keep talking about this creditcards.com. Are there some other websites that our listeners can go to?
Yeah, one of my favorites is Hustler Money Blog. That's a good one. NerdWallet, I've looked at that as well. And then one we just discovered recently was WalletHub.com. So there's creditcards.com, hustlermoneyblog.com, nerdwallet.com, and wallethub.com. And they will talk not only about credit cards, but also about checking accounts, which I think is going to be the topic of our next podcast. Checking accounts and incentives for checking, online bill pay, and payment plans to get your life where you need to be.
Thanks for checking out the first episode of Finance Fools. We plan to take questions from listeners in future episodes and enhance our quality. Just remember, plan your work and work your plan. If you liked this episode, subscribe and tune in for more from
The Finance Fools.